David saying in today's trade, why not include the balancing between 31 and 36? I mean, at the time, the reason that I didn't include it was the thought process was that if we put in a breakdown, below this balance that had formed in the overnight, then it wouldn't take a whole lot to revisit the bottom of the next balance. And it was basically just erring on the side of caution, especially because I think that on the larger time frame, the market is now again getting overdone and overextended. So those were the reasons, behind it. Because when I'm building the zones, I'm thinking about the entries and kind of, the actionable ideas that can come out of it. And, it certainly crossed my mind that, this in itself could be a little zone, from like 35 to like, 38 or something. You can make that its own little zone, and it could work. But, if we get a successful breakdown below this area, which means that, at least this breakout is now becoming invalid, then quite often the market will reach the bottom of the balance. And you can see that, if we just measure this balance up here, the 100% range extension also pushes us down towards that zone. So, it was erring on the side of caution. So the upper edge of the zone was 32.5, low of the ender being 33.75. I'm not going to change my process based on that, right? So just because the market didn't reach the zone today doesn't mean that now going forward, I start getting super aggressive with my zones and changing the way that I've been doing things. Again, that I think to me is kind of a rookie mistake, is that, you take something that happens on one day and then you just extrapolate it out and change how you do everything. Like, I don't do that, and that's part of the reason that over time, the trade plans and zones have been so consistent on the E-mini player site, is that because I'm not making changes to my method based on one day. Now if it becomes a recurring theme and I kind of notice, okay, wait, this is happening more frequently, then it's a different story. Then I might tweak things a little bit. But I'm not going to change it based on, oh, well, in this case, the market, got away, like whatever, it bounced 5 ticks ahead of it. That's going to happen. You can't, there's no methodology in the world that's going to give you the best of everything in every possible environment on every single day. It's a give or take. Part of playing defense or leaning towards the safe side is that you're going to miss some trades. Like, that's the trade-off. If you never want to miss trades, then you have to be okay with a much more volatile equity curve. Then you have to be okay with taking, several losses in a row, and psychologically it becomes tougher. So every trader is going to be different. What you see in OpenTrader, what you see on E-mini Player, that's a reflection of my own tolerance for risk, and it's a reflection of how conservative I am, and of course that gets passed on. So if someone is a super aggressive trader, which I am not, then you can adjust for that. I've never said I was an aggressive trader, and I've made it clear on many occasions that I lean towards caution and being conservative. So I develop my zones with that in mind, and that means that when the market is overdone, or when the market is unusually strong on certain days, then the zone may not get hit. That's kind of the cost of also avoiding the many days where the aggressive spot would have gotten you stopped out near the low of day before the market turned around. So again, there's no one and no method that captures everything across every environment. And this environment in particular I think, is not just something that's challenging for the group here. I mean, you have to keep in mind this environment is challenging for most people. Now, coincidentally, who is it not challenging for? It's actually not challenging for the new traders that are coming into the market because they don't know any better. They're just buying wherever the hell they can buy with no idea of risk or invalidation points or any of that stuff. And right now, you can get away with that. But that's also the same crowd that will eventually give all of those gains back and then some. We saw this in the dot-com bubble, right? Where everyone was, a professional trader. Everyone was trading stocks, buying at, stupid prices. And I personally know many people who were just, they would just get up in the morning and literally just buy whatever stock was IPOing that day. And they made a lot of money doing that. And then they also gave it all back and then some. Like, I don't know personally, I don't think I know anyone who kept those gains. Like, all the guys that were basically amateurs and were just kind of throwing, darts and picking stocks back in the late 90s, I don't know anyone who actually held on to those gains. When you're doing something that's just sheer luck and it's working, you don't know when it stops working. I mean, when it stops working, you think it's going to continue happening. It's just a fluke, not realizing that what was working was a fluke. And now is actually the real stuff, right? So I think the guys who are actually doing really well these days are the ones who have no clue what they're doing. And, they'll just buy wherever with no thought about risk, reward, or anything else. And that's fine. It depends on what you want. Do you want a career that lasts 3 months? Or do you want something that lasts, 20, 30 years? So if you're playing the long game, you can't really get caught up in this stuff. On some days we're going to catch it, we'll make money. On other days we won't. And then you have to find another way to get on board. There's the intraday bounce breakout. There's the consolidation that happens at the first hour high before the breakout. There's buying that very tiny retracement after the breakout. That's still a breakout setup. So, I mean, there are other ways to get on board. But this is the reality of trading the markets. It's not Kramer. It's not, CNBC. So this is the real stuff. This is this is how you do it. Sefel is saying I took a short after the breakdown of pre-market when it retraced back to 45 with a stop at 50 with my final target initial support. Would you consider that to be a valid trade? Yeah, I think that's a valid trade. Yeah, for sure. It's broken support acting as resistance. I like that you put your stop up at 50. At the time, I think the overnight VPOC was right around there from what I recall. It changed a little bit later, but I think early in the session, the VPOC was a little bit higher, and then it shifted lower to like 46.75 or 47 or something. But prior to that, prior to the open, it was a little bit higher. I think it was around 50 or so. So I think, yeah, you're putting your stop at a safe place. Your entry's solid. It's at the upper edge of the zone. Yeah, that's a good trade. And then the market gives you enough edge that you can reduce your risk. You're in from 45 quarter using a 5-point stop. If you take profit at 35 quarter, that's 2R, right? So no, that's definitely a valid trade, especially given how overextended the market was, how Nasdaq was behaving, and all that. So it's a good trade idea. And again, good or bad or valid and invalid is not based on whether it worked. That's kind of going back to the new traders entering the market just buying randomly. I have family members who have no clue how the markets work, and they're making money because they're just buying, whatever's kind of the flavor of the day stock, holding it for a couple of days, and then exiting, and they're having fun, they're enjoying it, they're making money. But when the environment changes, it's going to be the same friends and family who are going to be stuck holding longs from these very high prices, and then they'll probably just end up holding it for years and years until the market comes back, or whatever. So that's just where we are. This is a crazy market. If we look at the daily chart, you can see that we are starting to get overdone yet again, right? I mean, we launched from this swing low roughly over here, 33.90 or so, went straight line up over 100 points, only balanced for like 2-3 days, and then took off yet again. So I think that we are probably closer to a short-term top. I'm not saying we're closer like an all-time top. As a short-term trader, that's not really my concern. But I think that from here on out, can the market go a little bit higher? Sure, but it's definitely getting overdone. It's definitely feeling like it's closer to a short-term top. And I would be careful. And if you get caught up in this idea or this fear of missing out, then you will soon have a day where you take 5-6 losses in a row. That's just cause and effect. You can predict it. Anyone right now who has that feeling in their stomach, that fear of missing out, that frustration of missing moves, I can tell you how it ends. It ends with, a down day that's usually comes out of nowhere for most people, and that's when you've had enough. You know what? This market's moved so much without me. No more. No more. This is not going to happen. And that's the day when the market goes down, and you end up taking 5-6 losses, and on the other end of the cycle then. So you can prepare for these things. And, I'm not saying that I'm going to be shorting the market right away. But if I miss out on the next 30 points, I'm completely fine with that. Because I think that we're really getting overdone. I was looking at the weekly chart earlier, even today, this morning. And I was just looking at, this isn't like rocket science or anything. I was just looking at the magnitude of moves that we've seen on the weekly time frame, just to get a rough idea of like, hey, are we getting close to being overdone, or is there still, a lot more left in this thing? So I was looking at moves from the bottom and even before, where the market's made some really nice moves. And I was just measuring how much the market moved before it went into a week or so of balancing. Right, so I measured like the swing low from here to here, and then you can see we have a week of balancing. Then we launch, and we go from the lows here up to here. Then we get a couple of weeks of balancing, and then we break out again, and then we put in a pretty deep retracement, at least for this bull market, and balance yet again. So I was just measuring these swings this morning, and just looking at, well, this is kind of the launching point, or kind of the start of this move. On the weekly. So how high can it go based on previous swings, and not even based on huge historical look back, just based on the last couple of months. And again, this is not anything scientific. This is just me playing around with the chart. But looking at it, it seemed like if the market does over the next few days, if it does get up into 36, 36.20 to 36.40 area, like that would be kind of the extreme that we've seen recently. And remember that these swings happened off of a bottom. That's a different dynamic than a swing happening at new highs. Usually you won't get the same magnitude movement off of new highs because you need new buyers coming in at these higher and higher prices. And eventually you kind of run out of them. And so typically, you won't get even up to like, the same extremes that we got earlier. Because this is happening off a bottom. This is where like bargain hunters are stepping in. There's a lot more buying interest here. This is something that is, to me, a very risky time, to be overly aggressive in the market, because you might be approaching kind of a, closer to the end of the move, at least short term, than the beginning of one. So, when you take all of this into account, it gives you a different perspective on the market, and you don't have that fear of missing out, and you don't have that same level of, you don't have that frustration when you miss a trade. You're just thinking, okay, what's the next trade? And if you end up missing it, then okay, what's the next trade? What's the next base I can buy? What's the next pullback I can buy? But don't fabricate something that doesn't exist. Like, don't look at this and say, well, how can I just possibly buy anywhere? Well, yeah, sure. I mean, today you could buy anywhere technically after the breakout and it'll work. But that's besides the point. You want something that happens again and again. You want a pattern. By definition, that means it happens again and again. So that's the idea. Kevin's saying, what would change the long-term bias to neutral, taking out the 3,400 area? Yeah, I haven't really thought about that. 3,400. I don't know if that would even really change a whole lot. That's the thing, right? Like right now, the structure is so strong that 100-point pullback would do nothing to this thing. Like that's how strong the structure is. I mean, you can see that, over here earlier, we based and then we took off to the upside, right? And on the weekly, we end up getting this 50 to 61.8% retracement, right? Well, imagine if something like that happens now, So where do you measure from? Well, you can either measure from, the actual swing low here, or you can measure from the breakout. Well, let's be super aggressive and measure from the breakout itself, right? So that looks like this. A 50% retracement brings you back down into the recent swing high. That's what you'd be testing at that point. That's the 50%, and that's 33.8875. We're at 35.77 right now. I mean, think about that. You could put in a 200-point pullback on the weekly, and it would just be a 50% retracement where buyers could jump in yet again. So that's what we're dealing with. So just be mindful. Just be mindful of what we're dealing with. But that's what it is right now. And, I'm just reporting what it is. I'm not making anything up here. Just showing you how I'm looking at it, trying to be as objective as possible. We've captured most of this rally actually pretty well to the upside. And, the last 20, 30 points of it, if we have to be careful, it's not such a bad thing. All right, guys, we're going to wrap it up over here. Thank you for the questions. I hope you guys are all doing well, staying healthy, and trading well. And we'll catch up same time next Wednesday. Take care. Good night.